Hi, I'm Michael and this is California. So we're about just 2 months away from the new monthly child tax credit starting to get rolled out in July. These payments were authorized by the American Rescue Plan in addition to things like the $1,400 stimulus checks and will be in the form of monthly payments for families with children up through December. The amounts that families will start to receive can vary based on household income, the number of children on your taxes, and their ages. But starting in July, these monthly payments will help a lot of Americans to keep meeting their needs until the country opens up fully and we're all able to get back to work. In addition to that, the American Rescue Plan has another provision in it that would allow folks to write off up to $16,000 worth of child care expenses on their 2021 taxes. This could mean getting a lot more money back on your tax refund. So today we are talking about updates for the new monthly child tax credit payment that will start in July and the new much higher child independent care tax credit that could give you a lot of extra money back on this year's taxes. Now, this is your daily dose. And before we get to it, if you like this information, if you find it interesting, if you find it helpful, please don't forget to like and subscribe. That way you can get updates when our newest and most informative videos become available. So let's start by talking about the new expanded child tax credit that was authorized under the American Rescue Plan. The tax credit is basically free money that the federal government is going to give back to families who have children. This will happen first on a monthly basis starting in July, and then in one lump sum on your 2021 taxes. As it sits, we are about a month and 3/4 away from July, which is when these monthly payments will start. Now, although the IRS has not fully released the exact date for when people will start to receive these payments, we can anticipate that once the May 17th tax deadline is over, the IRS can pivot to getting these checks out, and there will be a lot more information available after that. That being said, what we do know is that starting July, families with children will get a monthly payment of either $300 a month for any children who are 5 years old or younger, or up to $250 a month for each child between the ages of 6 years old and 17 years old. This means if you have a family of 3 children and they're all under 5 years old, first, I admire your courage, and second, you'll get a check for $900 a month starting in July and every subsequent month until December. That would total out to $5,400. Then, on your 2021 taxes, once you file them, you'll get the other half of the child tax credit for the same amount back on your taxes. Also, for older children, like those between the years of 19 years old and 24 years old that are full-time students, parents can also get a one-time $500 for each of those children. Now, it's important to note that there are some income guidelines and limitations put upon these amounts. So, for example, any household who files married jointly, they can earn up to $150,000 a year and still claim the full credit. But these amounts will start to reduce above that amount up to the point of $400,000 a year in income. For single folks, this amount is at $75,000 a year for the full credit, up to $200,000 a year in income. Lastly, any children that qualify for this tax credit must be U.S. citizens and have a valid Social Security number. This means if they have an A-10 or an I-10, it will not qualify them for this higher credit. Now, another important provision from the American Rescue Plan for households with children is the much increased child care credit. This credit is meant to help families afford things like child care, especially this year when many children had to go to daycare while schools and kindergartens were closed. These credits are separate and independent from the monthly credits that I just talked about and would mean up to $16,000 that was spent on child care could be claimed as a qualifying expense for your 2021 taxes. This is up dramatically from the maximum last year, which is at $6,000. Things that could count as child care would be things like daycare, babysitters, after-school programs, before-school programs, day camp, or nannies. Basically, any organization or person that provides care for your child could count as long as you pay them. But a word of caution, if you are paying a babysitter under the table, it could be rather dubious to claim these credits since there is no record of those payments. In order to claim the tax, though, you will need to include these costs on your 2021 taxes, which you will file in April of 2022. Furthermore, you'll need to keep track of all your child care expenses, so receipts and statements showing you paid for the care. Then, with IRS Form 2441, you can submit it with your taxes to claim the full credit. You'll need the names, the addresses, or TIN or Social Security number of the care providers to include on those forms. Finally, there are income limits to claim this tax. So, for example, if you make $125,000 a year or more, then you're only going to be able to claim up to 50% of the benefit. For families who make $183,000 a year or more, then you're only going to be claimed up to 20% of the full benefit. And then for those families who make $438,000 a year or more, well, sorry, you're out of luck. Sorry, wealthy folks. Fortunately, this benefit is not only for small children. The up to $16,000 of qualified expenses can be applied to older children up to younger teens, and even older if that person needs additional care. First, the children who are being cared for must be under the age of 13 years old, or they can be older than 13 years old, but they need to be able to not be able to take care of themselves or be impaired. Additionally, either of these types of dependents must have lived with you for more than half the year, and for the older ones, they need to be either physically or mentally incapable of self-care, even if their income is up to $4,300 a year. Lastly, all the dependents' care expenses must be for the care of dependents who have lawful presence in the U.S., meaning that they have either a Social Security number or a valid tax ID number as well. These credits are probably one of the best ways to get resources into the hands of American families who need all the help that they can get right now. Now that the urgency of action has passed from last year, tax credits really are the most efficient and effective way for the government to get relief to families. Because, let's face it, stimulus checks, they were nice, but the delivery was sloppy. It was ill thought out and still frustrating for a lot of folks trying to get their stimulus checks even now. So I think it is good that the government is able to finally slow down and put thoughtful, semi-permanent, and not hair-pullingly frustrating methods of getting support to families. And although there are some financial hawks who will scoff at the prospect of these credits, wealthy people, they got so much additional support poured on them throughout things like the PPP loans, tax cuts last year, and huge gains in things like the stock market. It's only right that families get some of that extra money that is floating around, even if it means a bit of tax increases. Now, this has been your Daily Dose, and I hope that you found it interesting or helpful or at least useful. And if you did, please don't forget to like and subscribe. That way you can get updates when our newest and most informative videos become available. So that's it for me and for California. I'm Michael, wishing you a happy, healthy day.